Good morning and welcome to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, there is no respite for the bulls out there on Dalal Street. It looks like we are in for another down day, fifth consecutive day of losses. And Santo, things are very, very ugly at this point of time.
Complete panic at this point in time, and I think probably the WhatsApp university might now go into overdrive, and we could be seeing more of Warren Buffett quotes.
Yeah, I was swarmed with Warren Buffett quotes, and you know how India is in a golden period quotes all over WhatsApp last night. But if you look at the trade setup right now, it seems like Nifty is all set to open below the 16,000 mark, which was a crucial psychological support for the market, and only God knows where the market will head if it breaks through that support. Much of this weakness is coming from the US market. You know, the inflation print that came out for April was much above expectation, and that has bred more fear that the US Federal Reserve will have to go even more aggressively to hike rates to come, bring down inflation. Now, there is one thing that is happening here, is that cash, it seems that the market is indicating that cash is the king right now. If you look at the US dollar index, it's making 20-year highs, and that is indicating one thing, that at this point of time, investors are shifting towards cash and are not willing to make any bets or even buy the dips in the market. At least that is the case in the global markets, probably not so much in the Indian markets. But for us, that is also bad news, because that will mean that the selling from FIIs will continue to accelerate, and there will be no stopping that at this point of time. And the one summary of this entire move that we have seen in the global markets for the past 6 weeks, I just get one conclusion from this, that market can no longer count on central banks to come rescue them whenever they throw a tantrum. I mean, the markets have thrown a big tantrum. If you look at the US bond market, if you look at our bond markets, the global equity markets, there is tantrum all around. But central banks are not budging because inflation is too big a monster now.
Well, and there are political implications as well, and inflation is really hurting the weakest sections of the society right now. So that's central banks pandering to financial markets is okay when inflation is under control, but probably the situation you're seeing right now is also the result of all that pampering that has been done over the years. But well, better late than never, and I think probably the fundamentals of investing will be once again discovered by most investors. The truth that it cannot always be a one-sided street just backed by central bank money. That said, we are likely to see a lot of pain. We saw it in the small cap shares yesterday, and that's now likely to spread to mid caps as well. Speaking to dealers at most of these broking firms, I'm getting the feedback that you're seeing buying interest from HNIs. They're still averaging out, and they feel that there is value in some of the stocks which have come off sharply. But retail investors, they've been kind of on the sidelines. They have cut back, I think, because they went in a little too aggressively, and now because of the fall, I don't think they have too much of spare cash at this point to invest. So we could see some more.
You are seeing that in the pain that we are seeing in the small cap space. The small cap index is down about 27% from its highs. So that is clearly reflected there.
So we could kind of see some more, irrespective of where the Nifty goes in the short term. I think probably mid caps and small caps are in for some more punishment from the look of it at this point.
That said, let's dive into some of the stock action. There is a lot that we need to ponder over, so let's quickly get into it.
At Petronet LNG, the company reported its fourth quarter numbers yesterday, and unlike other gas companies, there was pressure on every front. Revenues were down, net profit down, also margins. But if you look at the stock price performance over the past couple of weeks, there is an indication that probably market has discounted this and is looking beyond it. Because yes, demand has been hit by weak demand from industrial consumers, which is very likely because they don't get subsidized gases. But at the same time, Petronet LNG is clearly a play on the theme that longer term gas consumption in India will keep on rising, and at some point gas prices will soften and you'll see demand picking up again.
Well, this is not a theme that Santo, that you're talking about, has just been discovered by the market in the past 2 weeks. It's been around since 2016 when the government first indicated that they want to shift more towards natural gas, right? And everybody thought, oh well, Petronet is an LNG importer, so therefore naturally it will benefit. But if you look at the longer term stock performance, the past 3-year returns are actually negative. It has made no money for investors. Yes, in the near term, maybe there is some positive trigger, But if I'm really looking for a wealth creator here, this is not the play to be in. You look at the action from institutional investors, that itself is giving a telling indictment on the stock. The institutional investors, both FIIs and domestic mutual funds, have both been trimming their stock in the past few quarters, trimming their stake in the company for the past few quarters. And if you move beyond the past 2 weeks, move, and probably in the next 2 weeks also the stock may remain strong because of what is happening to energy prices. The longer term technical indicators are also not really great. There is very, very limited growth potential for the company in a market where there are bigger fishes to fry and bigger fishes to catch out there with a higher growth potential. I would steer clear of Petronet.
Two quick points here. When you take play some long-term theme, there are stocks which do nothing for 5 years or 8 years, but when you look at it across 10 years, probably you see some huge. You've seen that even with the best of names. HUL is one example. So that is all I would say in favor of Petronet LNG.
Santo, you want to talk about a growth story? You look at Chennai Ferrous, right? The stock yesterday soared in a weak, very weak market. We know how the market was, where almost 95 stocks in the small cap space out of the 100 in the Nifty small cap index were down and out. But this micro cap stock was up over 10% in yesterday's trade, and that is largely driven by the sort of performance that the company has given in the Q4. It has been a turnaround story over the past 1.5 years. The stock on a 1 year to 2 year basis has given returns in excess of 1000%, right? And although it has come off almost more than 50% from its record highs that it made in the October rally, there is now new buying emerging on this counter, and that has happened because the company's Q4 numbers are now giving a lot of confidence to investors. The FY23 numbers itself will continue the performance that we saw in FY22, and this company benefits from being in the metal space. I talked about yesterday in detail how the demand space, the pricing space for metals is pretty solid, and this is one bet to make if you are looking to get in early, probably into a stock which might become a small cap or a mid cap in 3 to 4 years time.
Well, CJ, I take that point about increase in earnings and all that, but this is a stock I'd be very wary of in this market, right? I mean, just look at the price movement over the last 9 months, since June. It went from 5 rupees to 225, yes, and now it's back to 140. Tremendous volatility. Now look at the earnings consistency. If you go back, 5 years, 6 years, very volatile earnings, very, very volatile earnings. And in this kind of a market, you shouldn't ideally be getting into low liquidity name. It's got a very, very low floating stock, low liquidity, and this is a stock where you're likely to get trapped. Also, I believe that if something is looking too good, then probably it isn't. It is trading at less than book value, and inventory days is like 1, from 60 to 1. I mean, it's like people are just suddenly customers are emerged and picking it up almost on a daily basis.
That is what is happening. That is why I said it's a turnaround story. See, the correction has happened. It's maybe 6 months ago, even I would have been wary of buying this stock given the sort of move that it had made and without any sort of a intermittent correction in between. But it has seen the intermittent correction along with the market, right? It's not like it is singularly falling in isolation and the rest of the market is doing very, very well. It is followed in conjunction with the market, and therefore that fall is clearly justified. There was excess on the stock, and that excess has been taken out with the more than 50% fall it has seen over the past 6 months. Now you're seeing a lot of the longer term buyers coming in, and that is reflecting in the delivery volumes as well as the volumes of the stock. And I feel that probably this is the start of a next up move in the stock, which would probably take away the previous highs that it had seen.
Given the overall market conditions, CJ, why wouldn't someone look at a stock like Tata Steel Long Products? Same profile. It's also quoting at less than book value, slightly higher PE. So Chennai Ferrous is something like 1 times trailing PE.
Yeah.
Tata Steel Long Products is about 4 times. But much more liquid, much more consistency in earnings over the last 10 years.
But if you talk about high risk, high reward, there is I feel here there is not even high risk. It's like medium risk but higher reward. Tata Steel probably would gain. I'm not saying that it may not be an outperformer this year, but Chennai Ferrous could outperform Tata Steel by another 50 percentage points. So therefore, that is what I'm betting in a market which is so slow.
Zomato, the next stock that has been in...
You're going to take it apart, aren't you?
Oh, well, and for good reasons, CJ. See, this is a market where, investors are becoming increasingly skeptical of high valuations. So, you've seen a big fall in Zomato stock. It had rallied all the way up to 160 and now it's down to about 54 rupees. There's some bit of bargain buying happening here, but I really don't think the stock is likely to go
And
anywhere
why is that?
anytime soon. Just look at its earnings profile. Its losses, if it has narrowed down for this fiscal, so far it's largely been because of a big other income component. Otherwise, the sales is not growing in a big way. Losses, you may narrow down the losses to some extent, but that still doesn't change the fact that you're quoting at an infinity price to earning multiple. This is a market where people will go for companies with steady earnings visibility, and Zomato just doesn't make the cut.
It does. I'll tell you why. The fall that we have seen recently, right, from 76, which was the issue price, to about 52, which was the last price that it was quoted in the private market, the last time it raised money from the private market, right? Now, at this sort of a valuation, Zomato is a no-brainer in my opinion. Why? I'll tell you, because see, we know what happened in the tech bubble burst in 2000, right? Many of the stocks, some of the blue chip stock that you sing lullabies about in Infosys and Wipros of the world, all of them fell 80-70% from their highs, right? But did that make them a bad business? No. Zomato is not a bad business, right? This is not like Paytm, where you do not know where the business is headed, right? You are not very uncertain about what the business model is. Zomato's business model is very clear. It's not like people have stopped using Zomato, right? There might have been a little bit of slowdown because the economy has reopened, so therefore that pandemic trigger that it had seen in terms of home delivery and food delivery probably has slowed down a little bit. But in a vast market like India, where consumers are increasingly going over the internet to purchase everything that they need, Zomato is a high growth story that is now available at extremely cheap valuation. So probably this is one of those bets, they talk about Amazon, when it fell 95% and now look where Amazon is. For me, Zomato could be one of those bets in this market, given that it's in a very, very strong market and valuations are just too attractive if you keep in mind the sort of high growth trajectory that the company is in. It's not like revenues will stop growing less than 30% for Zomato. They will keep on growing. The company also is making efforts to trim down its costs because it has realized that profitability is as important as revenue growth, right? And that realization has come with it being in the public market. And you will see that the management also will learn what investors want from it, and it will continue to deliver on those fronts. So I will really look at these salivating levels of evaluation as an entry point, good entry point into Zomato.
Well, yes, fair point. I mean, it's the only one of the two players in the food tech platform.
Yeah.
But that said, what slightly concerns me about Zomato is that every company, for it to do well, sustained over a period of time, it should have happy stakeholders. I'm not talking about shareholders here. If you ask many of those restaurants, often when you go to restaurant, you keep hearing the refrain, you order directly from us and we'll give you a discount. It's almost the equivalent of Uber drivers wanting to drive offline. So that is not a
But will you do that, right? So what
I've been doing exactly that.
But
the moment
so
I got to
maybe you have that much bandwidth but for a guy like me, I only care about convenience, right? Zomato is convenient, Swiggy is convenient for me. I can just go and scroll the favorite restaurant out there and just order food as quickly as possible. I don't need to have to search for the restaurant, then go into their phone directory, look out for their number and then search. So that's Zomato. Another stock in this space that has taken a beating, but for me is very attractive right now, is Nykaa. I mean, the dramatic correction in the stock is providing a very good entry point for investors in Nykaa. It's you talk about profitability. Nykaa is actually profitable when it entered the public market, and that profitability has only improved despite the sort of decline we saw in the December quarter earnings of the company because of higher investment in the fashion business. So for me, this is a profitable business which is in a market which is a high growth market. Now that valuations have corrected so meaningfully, it's a no-brainer for me in that sense to buy this as a longer-term bet, probably something that could end up being your Infosys.
Well, on that note, the market has opened. The Nifty is down 137
but it
points.
Has held above 16,000.
Just holding above the psychological 16,000 mark for now. Nifty Bank is down about 1%. Look at the advance to declines ratio there. 463 stocks gaining and about nearly 1,600 stocks falling.
The mid cap space is also holding up actually pretty well. You look at the mid cap 100 index is down about 0.9%.
That's 1% down. I think it's taking a bit of a beating today.
Yeah, the market actually has now slipped below 16,000. So that 16,000 crucial support that we were talking about has given away, and it seems like maybe shorts might get the upper hand going ahead. And probably the next support for the market would be around, the big support would be around the 15,600 level, which was the low that the market had made in March. So we have to watch out whether market goes, takes support
at this
there
point,
or not.
all indications are that probably the market would go below that low. Well, as to the point on Nykaa, CJ, yes, it's one of the profitable tech names, but again, it brings me back to the earlier argument. How much valuations would the market be willing to pay? What if you look at the June quarter, September quarter, and December quarter, consistently there has been a year-on-year decline. And still at 30 times, if you're willing to pay 30 times trailing for a company, then at least you should see that kind of growth. That's not happening. You're seeing a degrowth in earnings for each of the 3 quarters.
But 30 times Santo is extremely attractive for a company whose top line is growing at more than 35%, 40% on a year-on-year basis.
That is true, but I would rather wait for the 4th quarter earnings to see whether there is any change in trend.
True. Profits probably are declining, but they are declining because they're investing heavily into the business. I mean, it's at a very small scale, right? And it's a digital business, internet business. Scale comes very rapidly. You do not even have to invest that much. Your sunken costs are very, very low when it comes to an internet business, right? So what you are losing out on profitability probably this year, you'll make more than that in the coming 3 to 4, even 10 years, right? And therefore, even at 30 times trailing earnings, I think it's a very, very attractive bet, my friend.
Okay, I'll throw one of your argument back at you since you keep telling this all the time. On technical indicators, the stock looks a screaming sell. It's been almost falling one way and volumes are increasing with each passing day.
That's why I said it's a contra bet to make. If you have the jigra for it, you make it. That is what I'm telling you.
Okay, that reminds me of a very interesting WhatsApp quote, the WhatsApp forward which I got, that with every 5% fall in the market, your knowledge base increases by 10%, but your courage or the jigra which you keep referring to every now and then reduces by 10%. So
my 10%
more knowledge, 10% less courage. Okay. So by the time the market is down 50%, you will have 100% knowledge and no courage.
I am saying my courage and my knowledge is improving day by day. That is what
the last stock on our radar for the day is ICICI Bank. The stock also has been under pressure like most other banking stocks. However, CJ, the short point I would like to make in favor of this stock is that just look at the earnings growth. This is a bank under Sandeep Bakshi which has been focusing clearly on profitability, okay, consistently. And if you look at the number, last 3 years compounded growth rate in net profit has been 81%. This is like the highest among all banks. Clearly, it's one of the turnaround candidates. It's been consistently narrowing down the valuation gap which it had with HDFC Bank.
Santo, ICICI Bank, I cannot say anything bad about ICICI Bank in that sense because it has been a great story since 2018, right? Even for me, it made me a lot of money in 2020, 2021 when I invested in the stock. But my point right now is that a lot of that gains and a lot of the positivity is already being priced into the stock, a lot of it, right? It's emerged as the kingpin in the banking sector. And true, hats off to Sandeep Bakshi for what he has done in terms of turning around. But the FIS selling in the stock is clearly a hangover and it's going to keep the stock in the pressure. If you look at some of the technical indicators and money control tracks, it's scoring a red almost on all indicators. You look at you talk about moving averages, which is usually seen by most technical experts. The 50-day moving average has moved below the 200-day moving average after a very, very long time on ICICI Bank's counter. That is a death cross, right? And I spoke earlier today, when a death cross forms, it's very difficult to get out of it immediately, right? You usually go through a period of pain before the next upturn comes. So for me, I think that move from 2018 to 2021 in ICICI Bank is done, and it will see a short-term correction now in the market, probably the entire of 2020, and then probably we might see another upturn, and that's when I will turn bullish on ICICI Bank, but not at this point of time.
Well, this death cross seems to be a very favorite, pet phrase of yours.
It is.
All of us.
At this point of time, there are only death crosses all over the market.
Exactly. That's
all that you need is the courage, which I have. So that is what I'm
and this is
about.
also market, as panic sets in, you will see a lot of all kinds of, chatter, rumors, or whatever you call it, and companies suddenly come under attack. Now, if you notice this morning, Indiabulls Housing Finance has suddenly said that it will redeem all its NCDs, about 800 crore.
Yeah, because there was now concerns over its ability to pay off debt, which was actually one concern that Indiabulls Housing also had in 2018's bear market. You remember when the entire INFS crisis happened, everybody thought that after Dewan Housing Finance, probably Indiabulls Housing will be the next one. It survived that crisis, but now that again interest rates are rising, you are seeing concerns over creditworthiness of some of the NBFCs. Indiabulls, of course, now is at the front line, and that is what is happening with the company. I'll tell you another company which is also becoming becoming a hit with rumor mongers is Adani Wilmar now. It's not that the issue is very new. The entire concerns about their FII investors and all of those things, and SEBI probably looking into probing who their FII investors are. All of those rumors are again back in the WhatsApp university, just because the stock has been falling for the past few sessions. So these are things that happen in these sort of markets, and it is very important for investors to separate the wheat from the chaff and be very, very diligent in terms of where they are putting their money.
Well, the cuts in the Nifty have just deepened. It's now down 234 points.
Yeah,
down
as I said, the shorts are getting an upper hand, it seems, and now it will be critical to see whether we survive the 15,900 point level.
Well, with that, we'll let you get back to your trading. I hope you enjoyed watching this edition of Markets with Santo and CJ.
And please post your comments on the comment section below, and follow us on the social media links that you can see at the bottom of your screen. For rest of your financial news, stay tuned to moneycontrol.com and the Money Control app. We'll catch you live at 3 p.m. once again.
Have a nice day.